Let's get some of this off here. Did I send everything here? 1, 2, 3, 4, 5. And okay. What's up? What's up, Mr. Mario? This is going through good. We don't need this anymore. We could go here and here. CoreWeave was up, I think. Oh no, CoreWeave South. I thought it was up. What the hell did I see that was up? How's everybody doing? Let me mute everything here. Yeah, this is good. All right. What's up, baby? How's everybody doing out in this crazy world? Hanging in there? We'll get give it another minute. Let some people scroll in. So yeah, you got CoreWeave down a little bit here. No catastrophe. Kind of where it was the other day. Excuse me. It's kind of been hanging in there, all considering. I mean, compared to some of the other stuff. AAOI, I forgot they were reporting too. That's an interesting name. I like this name. I owned it, and I don't own it anymore. Wow. I would have never held it through earnings probably. Anyway, just a piece maybe. But this looks good, man. It looked good throughout. Caught some nice action. Some with time, put selling. It was kind of that last batch of really interesting action that we saw before things kind of died out into earnings season. But yeah, it looks good. I wonder if anybody's still in this name holding runners in the room. What's up? What's up, everybody? What else? Anybody else? I think cores, are they tonight? This kind of moves around with CoreWeave a little bit too, though. Kind of a dead money. AAOI 49. Let me see. I might be able to make you feel better there. Where did I sell AAOI? I'll tell you right now. Here, right? Wait. No, that couldn't have been. Could it? Did I sold it right here, I think. How about that? Does that make you feel better? Yep. I think that's where I sold it. Definitely. It has to be. Because I remember I bought it here, somewhere in this vicinity, and I had this big move right after I bought it, and then I had a nice yank, and I was kind of pissed that I didn't sell it, even though I wanted to give it a little more time. But then this was just too good for me to sell. You know? So that was, yeah, less than 40, and now it's at 60. Oh, 39. So you bought it a little bit higher. Gotcha. Yeah. It caught action around here, I think, if I remember correctly, in this neck of the woods. Put selling, and I think it was June call sweeper activity, if I'm not mistaken. Anyway, yeah, that was kind of the last decent batch. Then we had the cyclicals in the start of the year, and now it's kind of been mishmash here recently. We'll talk about it. All right, let's get into it. Before we go, any other interesting names? I think RKT, do they report? Not that this is a big mover, but oh yeah, up $1.50. Yeah, this is a tough stock. You got to tuck this stock away. You could trade it. You got to try to be patient and buy these kind of pullback flush outs. It's got a reputation for it, because these stocks just aren't in vogue yet. But they buy pullbacks in this name. They've been buying it for a while now, going back to last year. RKT. So it can be traded if you trust your trading skills, but more of a tuck away name, I think, if you believe in the low rates environment and stuff like that, Fed rate cuts and that sort of thing. But nice pop back into the middle of the range here, and I think that's it. All right, so let's dive into it. Really interesting market. Okay, interesting is a little misleading because it's a difficult market. It's, you hear the term stock pickers market. It is a stock pickers market. It's a tricky stock pickers market, right? For a lot of the things we've been talking about on this webinar for the last few weeks. And the big problem for the way we look at things, and I want to just stress this, especially for those of you who may be new in the steam room too. I have a tendency, and again, it has a lot to do with how worn out and how long I'm in the game already, and kind of what I'm looking for at this point of the game. I'm not as aggressive as much these days as I used to be in my prime. I pay more attention to risk these days, I guess is the better way to put it. So, ideally, what I'm always looking for is kind of that cleaner, sweet spot risk reward type of setup. Now, granted, you're not going to find a lot of those, right? They don't come around often, but as close to that type of setup that I can get to is where I like to open it up a little bit and get kind of sloppy and aggressive as far as risk is concerned. The further I get from kind of that sweet spot setup criteria wise, I don't get as much FOMO anymore these days, because I've been through it. I know for me specifically that if it's not kind of that sweet spot environment, I know it's going to be a really tricky environment, and I can't expect to have the same success. There'll be winners, there'll be losers. Net, maybe grind out some profits if things go your way, but you're going to have to get really lucky to kill it in that type of environment. So that's kind of where I'm at. So if you're wondering, why I'm over patient sometimes in waiting for these things to set up, that's the reason why. And don't get me wrong, I'll play around in between. I try to keep most of that playing around intraday and shorter term time frame. What's beeping here? Is that me? I don't know. I try to keep stuff shorter term where I can control my risk a little bit more. And I try to grind it out that way. But, again, not everybody is looks through the same lenses that I'm looking at, right? If you're younger, you may want to be more aggressive, want to take more shots. But you just got to understand that the risks that come along with it. And if you're not paying attention and measuring these type of risks in different type of climates, you're going to learn the hard way that you just can't treat every market the same. It's not. Right. So I just want to make sure everybody gets that point when I'm talking about these things. And at the same time, that's why I always like, if there are if there are setups out there, if there are some opportunity and ideas out there, I want to share those with you. Again, I'm not talking out of both sides of my mouth, right? I'm not saying try to be patient. It's a tricky environment. And then I'm throwing out potentially some ideas. I know that not everyone is going to be as patient as some of us may want to be. Okay. So I just want to make that clear, right? Because that's generally, I would say, for the past at least 3 weeks now, right? That's generally where we're at, right? That's kind of what I'm looking at is, and if you remember, if you've been on the webinar for the last couple of weeks, the only thing, well, not the only thing, but the easiest thing to solve kind of the issues we're battling here that we're dealing with, this dispersion, this random type price action, this rotation, right? Again, the stuff that's really frustrating a lot of traders out there. The only way we're going to get a resolution to that as quick as possible is if we get that cleaner flush that kind of just cleans the deck, right? Shuffles the deck a bit and gets sentiment positioning a little offsides, especially on shorter term and probably some intermediate term timeframes. And this way, when that reversal comes, you got some tailwind to play with, right? May not last 6 months, but at least you'll get multiple weeks of broader, healthier type price action in the rallies, as opposed to what we're seeing right now, right? Yesterday, you got everybody junked up going into NVIDIA earnings. NVIDIA is going to save the day again. Literally, there was all call buying in NVIDIA yesterday. There was hardly any put buying, right? Everybody chasing that move. And, we run into the same predicament today where they get rinsed, right? And what happens today, it's not an overall market rinse, right? It turns into this rotation we're seeing again, where the Russell's green, the Dow is green, the equal weight, which we've been talking about a lot on this webinar. I thought it made a new high today, almost making a new high, but you can see a lot of chop here, right? It's just not clean, okay? So we're basically in sideways consolidation. We've been in sideways consolidation. The only thing, we were fortunate enough to have an aggressive rotation into cyclicals that we were kind of ready for, that bailed us out in a sense, right? Helped us alleviate some of the frustration of this sideways market that a lot of people had to deal with, okay? But as we got into earnings season and as a lot of these cyclical names ripped, they become overextended. A lot of them already hatch, and you have less ideas, right? Less opportunities. Now there's more risk in that part of the market where that wasn't there from October. And that's kind of where we've been at. Right. So now you're seeing selling in some parts of these cyclicals, right? The banks have run into a little trouble of recent. So basically the point what I'm trying to get at here is this, right? Every time we get to the point where we get that kind of tease of potentially some sort of rinse coming and may lead to what we're looking for and what we want, buyers show up and you get this squeeze, right? And let's look at the reasons why, right? Because this is kind of where we were set up coming into this week, okay? If you're wondering, why these squeezes happen out of nowhere, you get a little buildup of some caution and some bearish headlines and emotion out there, right? Example, Trump moving the whole entire Navy, Army, Air Force right outside of Iran, looks like he's ready to take over the whole Middle East, right? And what you get is you get stuff like this, right? So this is the Ridex bearish fund flow. You guys remember we used to look at this back in the correction early last year, okay? Because this was here, All right, this was kind of one of the signals that were confirming some sort of floor was going to be put in at least. Okay, so in simple English, what this is showing us, these are Ridex funds that strictly are moving money from bearish positioning to bullish. Okay, when they feel good about things, they take money from the bearish fund and they move it to the bullish fund. When they feel cautious and bearish, they move from the bullish to the bearish. Right? Pretty simple. And when you see extremes here, okay, at the least you get some sort of squeeze, because it tells you a lot about the psychology, the makeup of the market right now. So you at least get a squeeze over the short term. It's even a better signal, kind of like we had into the April Liberation Day lows, when this lines up with all the other stuff we look at, right? So when you're seeing this alongside some of the other major indicators that we check up on in the Steam Room and on this webinar, that's when it's, confirmation of a stronger setup, right? It's likely more than just some short squeeze, okay? But what we had here, even with the market minimally off highs, is you had an aggressive shift of money from the bullish funds to the bearish funds because, again, probably because of Iran, AI blowups, AI concern, software blowups, I should have said, private equity concerns. So you had enough negativity out there to get people to hedge enough, right? And when you get enough players over, especially if it's over a course of time, that can lather up in protection and hedges, and then nothing comes out of some of the stuff they were fearing, you get squeezes like we saw this week, right? Another thing we were seeing it on was this simple equity put to call, right? We were talking about, I think, about last Thursday because it started to elevate. Again, nothing huge, but you had to put the call that elevated up near where they like to squeeze them again, right? This is one off trading view. I think this one even shows it better. This is from Sentiment Trader. It's the equity put to call detrended. So in other words, it's more of a moving average of the put to call instead of the day-to-day gyrations. But you can see up to their green line, very similar to what we saw into the April Liberation Day lows. Okay? Now, can it go higher than that? Of course it can. Right? Of course it can. But without that catalyst, right? Without some of that fear coming to fruition, you get an unwind of these things. Right? So people get fearful, they put on protection, then they feel a little better about things, and they start to take off some of that protection, right? Like ahead of NVIDIA earnings. So that's basically what we've been seeing here, okay? I think the issue is that while we're seeing things like this indicate and some elevated hedging and protection that's taking place, we have some of the other things we pay attention to that aren't lining up with this. So in other words, what I'm getting at is we're not getting that kind of that big picture bottom type signal that we usually get into correction lows because there's just not enough signals there. Right? We don't have enough weakness in the market for it to be there. We shouldn't even expect it there. Surprisingly, this stuff is there. Okay? But that's what's keeping things kind of squeezy. So you got kind of the negative things that we've been focused on over the last few weeks, capping upside. And when things like this get a little overdone on a short-term basis, the market stays, as we like to say, squeezy. And you're playing ping pong basically in a range. All right. Here's kind of the other things that we've been paying attention to. See, this is the stuff I'm more again concerned. I don't know if I would use the word concern, but this is the stuff I'm more paying attention to that I want to see this stuff get washed away, so I feel better about the backdrop. I feel better about putting on more risk out there, because you got some stuff that over the course of my career, when they're signaling not risk on, it's not worth taking, putting on a lot of risk. Because again, as we talked about, the risk reward is skewed, right? You still have the same amount of risk, but the reward side of the equation is not there. Okay. So it's difficult for a market to kind of find upside follow through and broad participation when you got stuff like this showing bearish divergence. All right. So we talk about like VIX and VVIX. As the equity market has lingered around new highs, right, without a pullback, you're seeing lower highs and some divergence across the vol complex, right? We're seeing it in VIX. Even more concerning for me, you're seeing it in VVIX, right? So while these things linger, again, the main takeaway for me is not crash. That's where a lot of, especially newer traders who want to, get all bared up over anything they see, they kind of use these signals, find a little value, and then when they lose money off it, they throw it in the garbage can and never look at them again. Right? The main takeaway from this is not that a crash is coming. It's not apocalyptic. It's just telling us that this is not a healthy risk-on environment. At best, you're going to get dispersion, you're going to get chop, you're going to get random rotation at best. Right? So again, that's you need to manage your risk in an environment like that. You don't have to go into a bunker, right? So we still have it though, right? We still have it. This is what it looks like as of the close today. Okay. VIX a little bit higher. VVIX really didn't go higher today. The market, in my opinion, wasn't even down. It was more of a rotation flat day today. But you can see still an uptrend here. Here's the inverted VVIX that we look at. All right. So this should look like SPY for a healthy backdrop. And you can see SPY in the white in the background. Okay. And here, right, on the way up, all the way into early this year, it looked exactly the way we would want it. And then right into the start of 2026, you could see this a little change, right? The yellow line start to make lower lows while the equity market still was making new highs, right? And that yellow arrow is just pointing it out to you, right? And as you can, this has been in a downtrend. And even though the equity market has lagged on the way down, it's almost like a magnet. It keeps weighing on it, right? So it's capping upside. So we want to see these type of things. We want to see these things break up, one or the other. Either equities catch down, or we start to see bullish divergence, the opposite of what we're seeing in the other direction, to signal to us that there's a healthier backdrop to take risk. Okay? So that's one thing we've been paying attention to. Again, just an easy thing we can look at every day. This is one of these credit market signals that we like to look at in the steam room. And, we've looked at it in the past. If you've been on this webinar, obviously, if you're in the steam room, you're well aware of this indicator. But same thing, okay? In a healthy, strong tailwind, solid participation, easy to make money type climate, this should be trending the same way as the overall indexes. Okay, very simple. When it starts to diverge, okay, that's an early signal that the climate may be starting to change. Okay, the longer the divergence goes on, the more risk, obviously, that can bring. Okay, so we kind of been going back and forth, right? We get some divergence, then we get a pullback in the equity market, kind of sync things up. Okay. Recently here, though, as you can see, for the month of February, equity market, kind of was testing highs here and hanging up there. And look, this sticks out like a sore thumb, right? So completely just spills over here. So basically this week, as the equity market basically was pushing higher, this credit market signal was spitting on that rally, as we like to say. I wasn't confirming the upside. Right? So again, things to just make us aware of possible risk out there. You see a market, it's very easy to see a market ripping on a particular afternoon, getting FOMO like every other retail trader, and chasing every stock that's up, thinking everything's beautiful. And not paying attention to something like this that's telling you that it's not a healthy move. It's likely just short covering is basically what it's telling you. Okay. So today we get a little equity market pullback, right? Again, on the S&P 500. But you still got a pretty big disparity here. All right, pretty big disparity. So again, simply put, I either want to see this credit index signal start acting a lot better here, or equities catch down, one or the other. Okay. Now look here as an example. Okay. This, and if you were around going into 2025, this was one of the major concerns for us, alongside many other things that we really didn't have to worry about this go around. But you had basically full positioning across the board. Okay, you didn't have like we had now, where half the market was underowned and just AI and spec names were crowded. Going into 2025, they were chasing even cyclicals because Trump pulled ahead in the election, and everybody wanted to just own all of everything. Okay, but while that was going on, right, you could see how this started to diverge as the equity market was hanging up there. Ultimately, it led to this. Right? So, does this happen this go around? I have no idea. I don't have a crystal ball, but all I know is this is telling me that I should be careful, right? And be wary of my risk here, no matter what, because this is going on. That's the main takeaway for me. Like, I get it. People want to have, something that screams easy short entries. It doesn't exist, guys. There's no such thing as an easy short entry. It doesn't exist. You're chasing unicorns. Shorts are difficult trades. The most difficult trade in the market, period. What we need to pay attention to is when we should be getting aggressive and take more risk on the long side, and when we should be paying more attention to risk and raising some cash. That's, I think, the more important conversation. Okay? So again, I'm showing you two things here that, as bullish as I am, bigger picture, which I still am, okay, I want to see these things resolve before I can feel good about even considering taking some real risk here, if that makes any sense. All right. Here's another thing, correlation. Again, we got a little improvement here. If you remember, we were dancing around a level where basically it was dodging a landmine, as we called it, right? We get down there, you get a rinse in the indexes. It's pretty broad. If you get caught, it's going to sting. And, the upside is minimal. Well, who the hell wants to play in that type of backdrop? Okay. Basically, what we had here is we got a little wiggle room. Okay, because of the weakness in the market, because of the correlation behind it. Correlation has lifted, got up to as high as I thought it was 18. It's showing 17 here. Closed at 12. And if you remember for the type of rinse that we prefer to have, okay, I think at a minimum is going to be something like this. Right? Something like we had in November. Right? We'll take that at this point. We'll take that. Anything less than that, with the other stuff I just showed you and other stuff we've been talking about, it's just not enough. Maybe it creates a little bit of wiggle room to find some tactical trades. There's been tactical trades out there. Not easy, but there's been tactical trades out there. There's stuff moving in both directions. Okay. But for the type of setup that we want, where we can see some solid sweeper activity and buy something and not worry about missing the move the next day because it's over with, at the least we're going to need probably a pop to around this neighborhood with the other stuff we're seeing. Otherwise, the other solution would be the credit signals flip flop and start screaming risk on. Vol gets hit over the head and completely retraces, right? That can provide a decent tailwind for a couple weeks. But with the divergence we're seeing there, we're likely going to need more here for us to feel good about sitting in overnight risk, right? Because think about too, not only are you worried about a pullback in the market, that's risk, there's also rotation risk. Right? If you're in the stuff they're rotating out of, you don't need the market to pull back, you're still going to lose money. So you got multiple risk out there to be concerned about when evaluating this stuff. Okay. We looked at the put to call, right? So, that's where we're still at. There hasn't been any changes. The market goes up, the market goes down, these things move around a little bit, right? Kind of two steps forward, two steps back, going nowhere type of action. But until we see some resolution in some of this stuff, it's going to be a tricky environment, right? Like even sentiment wise, like I showed you, elevated put the call, elevated ride decks. If we had that with some of even our shorter term indicators like this down in this neck of the woods, we can make the argument that there's enough bearishness out there that at the least there's a high probability of a floor put in because there's enough people sitting in protection. But if we had one more rally on top of yesterday, you're approaching 70 again here, and that's elevated risk. All right, that's not what we want. We want down in this neighborhood. Okay, what else do I have? Ridex, I showed you. Anything else? Oh, and here's internals, right? Usually you get a pullback. Let's say a market's in an uptrend. Okay, you get a week or two of a pullback, and usually the pullback is highly correlated. Everything comes down together, and everything gets washed out together. So now, when you get a rally, even it could be just a bear market rally, a short squeeze over a couple of days, everything will rally back, right? Because you kind of oversold across the board. We haven't seen that, it feels like, in ages because of the rotation that's been going on. This is probably as clean as this internal heat map has looked in months. Right? You had the industrials were scorched. All these groups, materials, they're still heated materials. Energy's on fire. Utilities, old school utilities are on fire. And where the only thing that was oversold was basically parts of tech. So you don't have that clean, even when the market sells off for a couple of days, if that, you don't get that clean rinse, even on a short-term basis, to create a decent snapback rally. It turns into rotation. You realize that? Like, every time we do snap back, the rally turns into rotation later that day. It doesn't even last a day before it turns into rotation. And even on the way down, too. Okay? So these are the things that are kind of in the way and preventing that cleaner setup. Okay? But here's the problem. If we had that and there were no opportunities to make money out there, like there was nothing working, that would be an easier setup, to be quite honest. Because again, maybe some of you don't like to do it, but it's simply sitting cash and wait for resolution. I kind of like earlier last year. Right? For me, it was just sitting cash. Day trade, sitting cash, don't even look at anything else until we get a yank. All right. It may be next week, it may be next month. Whenever it is, it's inevitable because the risk is there and it's only going to grow. And there's nowhere to make money. Okay. That's not what we've had here recently. Right. We've had parts of the market that are under-owned that are ripping, are absolutely ripping. You know, and you have even some hot spots that have gone parabolic and are ripping. But there's momentum out there, and there are places to make money. Especially if you find the right spots. So if you are seeing these opportunities, and we'll talk about them in a second. But if you're seeing these type of opportunities and you like the spot, it's a solid risk reward spot for a trade. There's no reason not to fire. You might as well fire, right? I think where you got to be careful is chasing some of the stuff that is overextended, because if they start rotating out of that stuff, that's where the downside can be significant. Because they've been running for so long. But let's go over some of the stuff that's been working, right? Because again, it's in select spots, right? We talked about the transportation names, right? The trannies, as we like to call them. They've been on fire. And even more importantly, it's the leaders of that group, and it's usually this way. Remember, we talked about this. The leaders that have been just unconscious. Okay. So here, like the transportation names look like this as a group. What is this? What is that signal? Hold on. 8 turns. So again, right? Net bullish looks completely different than a lot of the things out there in this market. This is where it kind of changed here coming out of that October, this digestion, right? So here's where it changed. You had the breakout, and that breakout has led to names like this, which we've talked about a million times now. This is just getting stupid up here. FedEx, that can't even have a down day anymore, right? Just up every single day I look, the stock is up. All right. The other names, again, many of them that we talked about from some of the trucking names. But one of the recent decent setups out there has been the railroad stocks, the choo-choo trains. Very similar, right? Very similar here, where you have this breakout and just straight up. Now, if you're not in them already, right, or if you bought and sold it and it was a profitable trade, what do you do with it here now? You can't do a whole lot with it here right now if you traded this thing, bought and sold it already. Right? You kind of want to see some digestion or pullback, and the whole group. Here, we were talking about this last week, right? Maybe we see some digestion here off this violent rip. But no sellers yet. Again, these are, you got big breakouts here. Big breakouts. Here's the other one, NSC. Okay, so again, they all look bullish. I mean, this one looks maybe a little bit better, not as extended, NSC. But again, they look really good, right? So these are where, again, if you get pullbacks or some of these names, if you traded already, these are the opportunities we're talking about. These are the opportunities where you can possibly make some money especially if you're looking to be a little more tactical, because this is where the bullish momentum is at. You got the metals. I know a lot of you like to trade the metals, right? The metals and miners, at least they, they went bananas, and at least they ran into some selling finally. I'm talking about gold miners, silver miners, copper miners, all sorts of miners. There have been a few underbelly miners that have been still getting attention, right? This is a name that's been seeing active flow over the past couple of weeks. EQX. I'm not too familiar with this miner prior to the flow recently. Okay. So you got, in other words, some of the names we're not accustomed to seeing flow in this miner space. You guys know, like a Puff Puff Pass, which has been one of our favorite names for obvious reasons. So they're all strong, and they continue to be strong. The reason I bring them up here now is that off dips, right? Off little dips, there's such a strong bid in these things that they're trades. They're trades. If you're interested in this area, okay, you may not want to buy a Puff Puff Pass up here after this run, and give it a longer leash, okay? But because these things are in favor, there's still flow there, and they're still buying dips, and they're still supporting these names. Okay, again, not just even gold and silver. A name like Alcoa, right? And just violent move, scramble into Alcoa, and through this healthy digestion here. But you can see every time they're selling, they come in and buy it. All right, they come in and buy it. Today there was a gap down, and they came in and scooped it up. Oh, now some of you may think this still has more to go. I mean, again, the miners, gold miners have been out of favor for so long. You know what I mean? These things work in big cycles. It's just they've had big moves. That sometimes you have a big move, you need to digest. All right. I think the yank in these major metals helps. Let me get this off here so we can see. All right. So this helped that it happened that quick and was that drastic. But would it surprise me if silver hangs around here for a bit? Wouldn't surprise me. Again, buying dips may be the opportunity in that type of. I own for those of you looking more on the speculative side, I own a miner that I've tucked away from when I bought the miners a year and a half ago. You guys know the story. I've told you that. But this BTG. So this is a spec miner that I bought back then with the Nugget and JNug, and I just left it alone. I have equity, and has been seeing more flow and more momentum. But it's been moving, BTG. So they still got mojo, these things. They still got mojo. In a market that doesn't have much, they still have mojo. Okay. What else is out there? I'm trying to think of the stuff that kind of where the danger is, in a sense, guys, and I've been saying this a while. So disclaimer, I've been wrong. Okay. I'm not afraid to admit it. But parts of the semi complex, and kind of you've seen it off the NVIDIA action today. The semis are really, really crowded. They're really, really crowded. And they're crowded for good reason. They're probably the best things out there right now. All right. If you're looking for any type of growth, real growth, especially in tech, the semis are where it's at. But why do you think NVIDIA sold off a number like that? Their numbers, quarter after quarter, they knocked the cover off their ball. Their numbers are insane, NVIDIA. It's got nothing to do with fundamentals. And we talked about this. Everybody's in this name. Everybody's in these stocks. So, some of the others are lesser known and not as crowded, but they've had parabolic moves. And you just got to be careful. You got to be careful. Like, again, I think this is a semi, but this stock has been pure insanity, this light. Look at this, up every day, right? And obviously you guys know names like this, SanDisk and the Microns of the world and all that. I'd be really careful here. I'd be really careful here for obvious reasons. I'd be really careful here. Another underbelly semi that's been getting a lot of attention. You guys know I've been posting it on Twitter too, is this AXTI, but this has gone cuckoo now. This has gone a little cuckoo. Oop. So that's the area I'd be careful about, okay? Because again, for whatever reason, you may get rotation out of it, profit taking out of it, and I think risk reward wise from here is not too appealing. You know what kind of interests me here, and I don't even know if it interests me yet, but let me explain to you. The software names, what we're seeing in software recently here. Now, granted, they're so oversold that they can't go down forever every single day. But we've started to see some seller's exhaustion finally show up in some of these software names. And it's going to be interesting to see over the coming days, because what I'm looking for is they're going to try to sell these things again. These software names, I highly doubt, are just going to rally back in the straight line, right? They're going to remain choppy, and there are going to be down days where it looks like they're ready to fall out of bed again. That's where I would keep a close eye on the sweeper activity and even the price action. That's where we may start to see some early constructive signs in some of this stuff that they've just destroyed. They've destroyed. So I'm kind of that's a part of the market now that, because of all the damage there, that is somewhat interesting, especially compared to all the heat out there. But we'll see. We'll see. We saw a little bit of flow. Again, these names usually catch big flow, but we saw some Microsoft flow coming yesterday. Overall, the flow's still messy, but big guy in May calls. ServiceNow, which we've talked about. What is this? ServiceNow, which we've talked about. I would definitely keep an eye on that name down here. But I think even more so on down days than up days. Because they're going to be squeezes. We want to see if the buyers show up on down days. To me, I think that'd be the more telling sign. And another thing, even if there's still chop left in this market, or even some weakness left in this market, believe it or not, you may even happen to get outperformance in this group. Right? They may even buck the trend because they're already obliterated. Now, they may not go up, you understand? But they may hang in there a lot better if the market kind of sees some selling. And if you're looking, if you're looking at them on down days, on days of selling, it could be some worth our while, basically, is what I'm getting at. Yeah, I mean, again, CRM, I know they had earnings, so we'll see if some flow shows up there. Again, that stock was down, and then they took it green. Again, sellers just look tired. I'm not saying software is back, all the problems are gone, and we're off to the races here. You reach a point where things get overdone, and at the least, some sort of floor gets put in. All right? So if you're looking to take advantage of weakness and some sort of decent floor gets put in, your downside limited, and you catch some good news and get some shorts to cover, you got some upside. The positioning in software is nuts. Like it's so one-sided, right? It's heavily shorted. The only thing, and if you remember, we talked about, you had retail come in and buy this dip. If you remember, you don't want to see that, but they kind of got it run over here. So that's what you wanted to see. That was the last thing left, in my opinion, is retail buying this dip, kind of getting shaken out. You remember we looked at that here. I think it was like 2 weeks ago. Like that was the main the one last concern there that you probably laid out here. All right. So like they came in to buy that floor. You can see the big green spikes. And they, you got to believe they got shaken out here. All right, new lows, spit them out, and then take it back. That's a good sign. That's a good sign. So definitely something to keep an eye on here. Definitely something to keep an eye on here for opportunities. Yeah, wouldn't get sloppy long chasing green, but I think even more so when they try to sell these things, there could be opportunity. All right. So what else is there? I'm trying to think what are the parts of the market. The financials, right? And you know what's funny? The financials, you have this, they kind of getting the brunt of tech, right? So you got, because of some of these private equity firms with the software names on the books and the AI names on the books, it's like the financials never could get away from that forever. But I still think buyers show up here unless something blows up. That's kind of the risk in these things, obviously. You have stuff like this that's lingering. Jeffries, people talking about may have some headaches. The private equity names that we looked at, they've all been in the shit house. So again, for trades though, I think they're trades here. They're trades in the financials. They are trades. Lastly, you guys know again, I'm bullish home builders. They've had a dip here because Trump was supposed to gas something up on the State of the Union. He did not. You got to pull back. I still like the home builders. Yeah, I think you need patience. We really haven't seen a lot of flow in individual names in the home builders for whatever reason. They don't catch a lot of flow to begin with. So I would kind of stick with the ETFs. PHM, I think, is the best looking name of the bunch. That and Toll. And, I think if you are interested, you want to buy pullbacks here. You don't want to chase green. You want to buy pullbacks because fundamentally they got problems. There's issues here, no doubt. That's why they're on their own and they're a big laggard in this cyclical rotation that we've seen. But I mean, as ugly as they've appeared, and as bad as they've lagged and looked, you look at a chart of XHB. I mean, that's a good looking chart to me. Yeah, that's a good looking chart. So again, I own Nail. I still own Nail. I've added to it once. I haven't added any names yet. I'm kind of waiting on flow. But for me to not take these and sit in it and give it up, that's a lot for me. You know what I mean? Like, for me to do that is I want to be in the trade for a while. I'm willing to punt short-term profits to try to catch the bigger enchilada. over time. Because I got a nice and that's why I don't want to chase through. I got a nice cost, roughly 55 and change-ish average cost between the two ads. And I was up almost $30 on that trade. 30, and I didn't take it. Don't ask. It's not easy. Not easy. So I'm kind of sitting in it. If it comes in a little bit more here, I might add one more time to nail. I want to try looking at names, or even it may not even be a home builder that I finally add. It may be a home related name at some point, which may come next. In other words, but you got like this is what I'm referring to, like names like this, Lowe's or Home Depot or these type of names. Which again, some of these names have had nice rallies already, but off pullbacks, they still look interesting. Is RKT going to be hit like software? RKT software? Oh, RKT, the mortgage company, right? Oh, I don't know. I really don't know the business. Who this AI disruption thing? Who knows? Who knows? It's definitely a risk out there. That's why a little bit better if some of these things you're looking at have already been beaten up. A lot of the risk has been priced in. But RKT software, I thought RKT was a mortgage company. But the honest answer, Super Gal, I don't know. I don't think anybody knows, to tell you the truth. I don't think anybody knows. We're all guessing. This is all new. Some people will be right on certain things. Some people will be dead wrong. It uses a lot of AI. Oh, really? I didn't. Yeah. Again, you're asking the wrong one. I'm just being honest. I could pretend I know what I'm talking about, but I'd be completely lying and faking it. I don't want to do that. I don't want to do that. I haven't really been following it, AJ. I saw a couple Zero Hedge posts about it. Raj was talking about it in the room. But I haven't really been following the Jane Street thing. I know they I think they were under investigation and stuff like that for kind of what they've been doing. More, I guess, what you're getting at, manipulation and stuff like that. But I haven't really been following it, the story there. I guess I'm going to look into it because a lot of people are talking about it, and it sounds somewhat interesting. There were rumors the Holt and the CME was related to that, but it wasn't, right? It was a cooling issue yesterday. But I haven't been following it. But I'm glad you brought it up because I'm definitely going to look into it because Raj in the room was talking about it as well. What else is there? Anything else? The Russell, you guys know my take on the Russell. I hate to just sound the same old story here, but I'm bullish. I not adding till we get a pullback. If it goes higher, that's fine. I'm in IWM calls now that I moved everything into. So I'm fine there. If we get that's what if we get this, like if we get a bull signal here, that's what I'm buying. So I'm going to buy TNA. I'm going to do the same thing that I did the last two times. So if we get a setup in the market, the first thing I'm going to look to do is buy some TNA. And if we happen to time it right, we get a decent rally, I'll sell the TNA and I'll take some of that and throw it into some more IWM exposure, and that'll probably be the last, to tell you the truth. The next pullback or correction, whatever it is, I'll probably have one more TNA in me, and then I'll leave that trade alone. Yeah, well, I want to kind of be in it before that happens, Sahil, you know. So, I got cushion now, so I'm kind of sitting pretty. I'm sitting pretty where I'm at now. But if we get a pullback where we get like short-term sentiment bull signals, I'm definitely going to buy TNA. That's you can. That's a. I'm going to write. We could write that down right now. Like that's the first thing I'm going to do. That's the first thing I'm going to do. And then then chill out and see where it brings us into through the summer and shit like that. But yeah, I still again, there's a lot of shit going on in the world. It's crazy, it's nuts, but you have a lot of skittishness out there. Is that a word? Skittishness? That's not a word, right? You know what I'm talking about. There are a lot of nerves out there. There's politics involved, there's a lot of stuff. Trump is a walking wall of worry. Plain and simply put, he's a walking wall of worry. And I just think that's a good thing for markets. Now, it's not a lot that markets go higher just simply because of that reason, because there are exogenous events. And when you have this many bulls in the air, I guess you can bump up the probability of one of these things possibly, even showing signs of coming to fruition. But that's why I think, again, the next best entry for us is going to be the next floosh when it comes. Like that's kind of what I'm waiting at here, waiting on here. Yeah, I don't know how big it's going to be. It may not even be that big. If it showed up now, I don't even think it would be that big. But that's kind of the next best entry on the entire market, on the entire market. It is a word. There you go, T. I knew I was working on my vocabulary. So, that's kind of where we're at. It's how aggressive, how much risk you want to put on here, and risk, taking a little bit of a hickey if you get caught in some sort of tug. Again, I think the tug is viable. We want the tug. The tug ultimately solves all the problems that we're concerned about right now. And mark my words, listen, when the tug comes, like, granted, we all may be saying we want the tug, and this is always how it works. When the tug comes, nobody's gonna want the tug. You understand? When that tug finally comes, there's probably gonna be some scary shit around it where people aren't gonna want that tug anymore. You can envision it. You can see it happening. Like a hiccup in Iran, and nuclear world war, the end of the apocalypse is here. Forget about stock. Like you could just see it happening. Like people want the pullback now. They're waiting for the pullback, but when it comes, they don't want it anymore. But here's the thing: the most important part, right? Like you say to yourself, people are waiting for a pullback. This market already did a lot of damage to bulls. Okay, don't let them fool you. They're not going to tell you. Well, some of them do. Some of them do. I run into people on a daily basis that cry the blues to me. You would think we were in 2000 all over again. You would think we were in 2008 with people that I talk to on a day-to-day basis. Crying, blown up. I own Bitcoin. I own this. I own that crypto name. I own MSTR up here. Is it ever going to go back there? I own Oklo at 180. It's at 60. They're already, without the indexes even budging, you've already had the bulk of a correction in this market. You realize that? Like, I'm not even saying it because you guys are, the majority of you guys on here, hopefully anyway, big chunk of you are Steam Room members. A lot of you are on this webinar. A lot of us have been able to sidestep the correction that's happened since October. You understand? That there's already a legitimate correction in this market, in the stuff that was overowned. The last hurrah are the semis. That's where everybody's hiding now. That's where everybody's hiding. So that's where it's likely going to come from, right? You're going to see the semis crack, roll over. They're going to lead on the way down. It's going to weigh on everything else. You'll probably start to see some software names and stuff like that that have already been obliterated start to flip green and hold up better. You know what I mean? But that's going to be the last of it. That's going to be the last sign, in my opinion, are the semis rolling over. And then what you're going to have is you're going to have every bear thinking now the semis are correcting. It's all over. Game over. But what they failed to realize is the correction already was in place. We've been in a correction. And that's the last to go boom. And you're going to see cyclicals come down with the market, right? Everything is going to be correlated to the index. And that's where we're going to get opportunities in the cyclicals. But you're going to basically, after that correction runs its course, after the semis roll over, everything, at least initially, when the market finds a bottom and turns, everything will bounce. But then I think the cyclicals will lead from there again. But I'm getting a little ahead of myself, because I have no idea. This can go on for another few months. I know it's hard to believe, but you guys forget, we were looking at DAX. And if you remember what we were saying, this was the ultimate pain trade. If this happened to the NASDAQ, okay, if what the DAX did here, okay, if that happened to the NASDAQ, that's basically a crash. That's basically a crash. Because think about what you got going on here. We talked about this in the Steam Room. You can't get a bigger pain trade than what's going on, right? Here's how everybody was positioned, okay? They owned Mag 7 names, AI names, Oracle, Bitcoin, spec names, theme names, OCLOs, nuke names, you name it, right? All this stuff, all this fancy pantsy, new tech, new whatever. Okay. While they were long all these names, they were buying SPY puts, Q puts, and adding some VIX as protection. Right? So what happened? In October, all that stuff that they were buying up for months, right? That was a beautiful rally. All that stuff blew off top and crumbled. Okay? In October. Right into this. All that stuff, right? 50% off the high, some even more, demolished. You name it, demolished. All right? Bitcoin, everything. Look what the NASDAQ did. So their NASDAQ puts, why does this keep popping up? The NASDAQ puts, did it soften the blow? No, they probably lost money on their puts. All right? VIX, every time it pops, sellers come right in, can't go anywhere. So their long book, poof. Their hedges, poof. Ultimate pain trade. Yeah. And that's what you have going on here. And this is the last. This is the last. Now, granted, this well, you had a couple things going. First of all, this has been a beneficiary of all that capex. You had the memory shortage. The fundamentals in the semis have been they're ridiculous. All right. You can't get a hotter area of the market. There's nowhere near it growth wise. But now you got everybody in this trade. Whatever money they can salvage from all the stuff blowing up is in the semis. So once this goes, bloop, that's it. Case closed. Case closed. Yeah. A weird correction, but that's where we're at. Where are you Bitcoin bros at? What's going on here with Bitcoin? Who trades Bitcoin? Anybody have any insight on the Bitcoin they can offer here? This is, I think Bitcoin, this is what you would want to see here. Bitcoin to the moon. Bitcoin mooning. Here. Look. Maybe something like this. Stop popping up. But you want to see a low put in first and kind of hold that low, I hope you're being sarcastic. Johnny Franco, is that the closer for the Mets? Or the jockey at Monmouth Park? Fart coin. Load up in fart coins. But this is let's see, does it look like that top here too? Let's see what that looks like. Yeah, a little bit, right? Look. Very similar. 1, 2, 3. 1, 2. Yeah. I don't know. Maybe one more south. But it probably some more pain like this. Sideways action. What do oh, here. This is what I was looking at here. Oh, this was longer, yeah. That was a couple years. Jeez. Yeah, you're not the Hall of Fame pitcher for the Mets. So what else? Anything else to look at here? We looked at yeah, and yields are coming down, right? So you got rates coming in. Maybe coming in for the wrong reasons. Slower growth economically, but that's okay because we get the Fed back involved. Again, maybe it is that growth scare we talked about that is part of the final whoosh. But yields are lower. That's good. And again, the opposite. See, I'm convinced, and I could be wrong if we go to nuclear world war, but almost always the Fed puts an end to this by raising rates. What did I do here? Financial conditions are easy peasy still. Oh, the dollar. That was the other thing. And the dollar, you know, can't get out of its own way. I think we do. I think we do. I think we're seeing some signs of it. They're just, again, it's unbelievable. It's been really resilient, really resilient. But I think rates are coming in a little bit for that reason. GDP's been, we missed the mark last number and it's been trimmed down. Jobs are the thing that's hanging in there. But again, these job numbers, who the hell knows what the hell we're looking at, But it feels like only a matter of time. But I think ultimately it's going to be that. It's going to be a little bit of a growth scare. You get the semis that tip over, but ultimately it gets Trump's Fed back in the game, and you get a nice refresher. Again, I think already, Bitcoin's been telling us that, that kind of risk appetite, spec appetite has been dead. You're already getting a correction there. It's just been, these cyclicals and economically sensitive names that, benefit off loose financial conditions and an economy that actually was coming in better than expected. That the rally has pushed a lot stronger than a lot of us thought. March 2027, they were clean. There may be some rolling. We'll check open interest tomorrow on those SPY calls. But here's the thing I will say, okay, about that. And here's the problem. Even if they're clean, oh boy. Here's what he's talking about. Even if these sweeps, and there were a bunch of them, are quote unquote clean, meaning directional bets. I mean, March 2027, this market can crash not once, twice before that expiration date, and he could still make a killing on those calls. In this market, you know what I mean? So honestly, if it's something you're interested in, what I would do personally, later T, have a great night. What I would do is I would wait for something like this to trigger bullish. I would wait for something alongside it to buy it. Me personally, to buy them here. Who am I to say, they're not going to work out, right? I mean, the market, even let's say you have a 7% correction, 8% correction, those can easily make money by that time, long before that time. Yeah, I don't know if they're a hedge. They could be an adjustment. Somebody moving a position, kind of like what I'm doing with IWM calls. So if I roll IWM calls and push them out, even though I'm not adding new risk, right? I'm not putting new money, new risk on my position. I'm just pushing my position out. That I think is what could be happening there. But, again, me personally, that's it. If that came in and we had bullish sentiment signals, then I think at least half the room would be buying them. Like half the steam room would have been buying them. Yeah, that's exactly what I would do. Exactly what I would do. You probably get them cheaper. and you got something else behind it. But tomorrow morning I'll post the OI changes, and we'll see if we get a cleaner look. Maybe we could tell if they're moving stuff around or if they added them all. Because it's interesting. You see what we've been seeing in SPY for probably a good month now. A lot of March put protection for this March. So it's almost like they're protecting the short term, and then now maybe we see some, further out call buying for the longer term. But yeah, I would definitely keep an eye on that trade, and maybe get even, better cost, which would be great. Because that's a lot of time. That's a lot of time. And lastly, again, might as well update all the people in the steam room. Flow wise today, guys, it was really light action. You had some software squeeze flow, as we like to say, some shorter term flow and stuff like ServiceNow. Oracle had a little, Netflix had a little, but mostly squeeze related action. And the better looking action was all in repeat names, a lot of hotter names. You know what's another hotter group we were looking at in the afternoon in Steam Room? The shippers. Anybody in the shippers? So this is the popular name. Most of you guys know. STNG. You guys remember this thing? Look how good this looks. Again, they're a little heated here. But overall, not a bad look at all. Right? Here's some of the other ones that have been seeing some flow. Slower, cheaper, NAT, North American Tankers. And the other one, I think, reports earnings today or tomorrow. FRO. But look at this move. Look, oh my God. Explosion. Explosion. So this is a hot group. This STNG looks like it still has upside, no? Maybe you get something like this here. Kind of into an upside niner, 2 niners. Jesus Christ. But so we saw some flow here. WMB, we saw some repeat April buying in this WMB. Look at this stock. These are a lot of energy related names. They bought today April 80s, April 80 or 85s, and I think early February they bought the 80s. So flow's been picking up out of this. Strong name. This KMI, Kinder Morgan, which is slow as molasses, but making a move here. These are all the flow. These are all the names that have been seeing flow consistently. They're just not the sexiest names out there. This is a name that has some flow a week ago. Digesting a little bit here. Big breakout. EPD. But these are all energy names. So just keep in mind that if this Iran thing, if they come to a deal, you're going to get probably some crude selling, and these energy names will come in, and that's probably the time to buy them. On the flip side, if we're going to World War, then obviously you're not going to get that pullback. So that's kind of the problem here with these energy names. Have you looked at ExxonMobil lately? Yeah, it pays a dividend, KMI. I mean, a lot of these names pay a dividend. A lot of these names pay a dividend. The knock is you got big moves here and so quick. It happens so quick. You have no time to even think. You have no time to think. This is literally up in a straight line for 3 weeks. That's why in this market, to try to catch the bigger moves, you almost have to be early, right? Like see even the home builders, you have to be in now if you want to catch the big move. Okay, if you're looking for trades, you can wait, you can play off the momentum, but you want to be quicker there because you're going to be a little later. But if you're looking for to catch the meat of a big move, the way this market is these days, you have to be early. You got to be willing to take on some water, leave some room to add. I don't know, is that bullish or bearish? But I think the semis are dangerous here. Island, that's bearish, right? Yeah. Yeah, I think there's some risk here. They're really crowded, the semis. They're really crowded. Now, again, I don't know how easy the short is. GX, they never make the short that easy. But positioning wise, they're extremely crowded here. Like very similar to this high here. You know, if you remember this high back here, right? It was really the only place to play AI. So you had everybody just hide out in the semis. You know, here it's very similar with all the tech carnage out there. The only thing I will say is you have the cyclical semis that have been acting better this go around. Then it was just those big AI semis. Now you have like these names, AMAT, you know, that have participated. But look at the move in AMAT. Goodness. Some of these names that couldn't get out of their own way have joined the party. So, but you got to be careful with the semis. Yeah, if you're in them from lower levels, I would, if you're in options, I would roll, stuff like that. But to buy them here is dangerous. You got to be careful. You got to be careful. And again, I think that's the last, that and the cyclicals, but the cyclicals I don't think have to come in that much. The semis are going to be the last move down here, and I think the latter stage of this rolling correction or bear market, whatever you want to call it. All right. Oh, one more thing I forgot. I usually update you guys. The Sharpies have taken off their hedges. They got some VIX exposure. That's about it. And we get an update tomorrow. But here's what Sharpies look like. So Sharpies aren't all that concerned about much downside. Overall in the market. So they're dead neutral here. Dead neutral. Okay. So again, it's not a bullish signal here, but if the markets do come in, you're likely going to get Sharpies and exposure. So that's good. Again, here is where they were at early last year into that correction. And then the market yanked. Wait, yeah, right? Yeah. No, I'm looking at the wrong chart. That's not the right chart. Here it is. Here. I knew that didn't look right. So they were down here early in the year and then added into the yank. I'm dizzy. That's when you know time to wrap it up. I'm looking at a completely different chart. Credit default swaps too. You can see again a little bearish divergence there, similar to the credit signals we looked at earlier. All right, my friends. As always, I appreciate everybody stopping by on Thursday talking shop. To put a bow on things, and there's some momentum to try to play tactically while we wait for a cleaner setup. Maybe when the semis finally crack, we get it. But I personally, I don't think we're going to need a whole lot of weakness before we get that cleaner setup because of how much damage has already been done out there. All right, so we'll see how they shake them out nice and easy each and every week. Enjoy your Friday, and Steam Room members, I'll see you mañana. Have a good night, everybody.